The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. I'm feeling good, just not talking good. We've been attacked here in southern Arizona with the Palo Verde tree. There's absolutely beautiful trees, but boy, oh boy, for the first time in many, many years, I've had allergies like it's been horrible. But anyway, let's get on to the markets. We're going to have Cy Monley as our guest today from Sylvius Financial to talk to us about some of these grain markets, and we're rocking and rolling in the soybeans again today. They're up sharply. Wheat's moving higher, corn's moving higher, so we'll be talking to Cy about that, also the cattle market and some other things that are going on with tariffs and hogs and stuff. So we'll be chatting with him at the break. To start off, we're going to look at the DAX index. As you can see, we're back up in the consolidation area. Those triple highs that we've had up there at 12,500. That's going to be a very interesting spot to see whether it can get through that resistance or not. If we take a look at the FTSE, that has even been, that's been a lot stronger. We're almost back to those old highs at 7,800. It's retraced 78% of the whole move in the FTSE, so it's not there yet. It's got another 50 points to go, but given the fact that it's got that ABCD structure coming in at that price, has a high probability of getting there. So keep an eye on that. That's going to be a very interesting one. Now, folks, I want to start out the show just a little bit differently because I got 2 emails this past weekend about technical analysis that they couldn't understand how anything could work in technical analysis, and all I did was I prepared this for their answer, and I wanted to bring it to your attention. I actually put it in the newsletter because it was so amazing. This is the chart of Facebook. As you can see, remember, this has nothing to do with fundamentals. This is just bar charts. These candlesticks, not even bar charts. But you'll notice the ABCD pattern when it made the high up at 0.1. Then we broke down and made a 61% retracement. We rallied up to a 61% retracement. That made 0.3. Then we came down and made a beautiful ABCD, stopping exactly at the 1.618 expansion at 148 and change. And that is when we started following Facebook, looking for a potential rally. And you can see what we've done here in Facebook is we've completed a 135 pattern on Friday, exactly to the, within, I think it was in 2 cents. It went 2 cents above the 618 retracement level, and that came in at 175.12. And now this morning we're trading at around 173.59. Now, this sets up a potential target you can see in Facebook. Now, this might not happen at all, but, well, we never know what's going to happen. But, you had a ABCD structure, just absolutely perfect. You had a 78% retracement of the last high. You had a 61% retracement from 0.1. And so you have 3 lower tops. That's a definition of a downtrend. You have lower bottoms. You can see the lower bottom in March. We have lower tops from February. So that's a definition of a downtrend. You're selling an ABC rally, the first one, like Gartley said on page 222 of his book, Profits in the Stock Market. That was the best trade of all. He spent 2 full pages discussing that. So that's what it's really all about. It's it's just numbers. Has nothing to do with the fundamentals, of course. The key to remember here is if we get above $79 a share, this is wrong. That's basically it. That's a risk of a little less than 3% on a stock that's trading for 175. So that's the story, and I'm sticking to it. So we'll see how this works out. But that's what we try to do with technical analysis, is look at these patterns and determine where we are, as opposed to reading the fundamentals in the Wall Street Journal and all the other stuff that comes out that sometimes has a tendency to be misinterpreted by the public. You can't misinterpret a bar chart, folks. You have to realize that if the markets are going up, there's more buyers. If the markets are going down, there's more sellers. That's primarily what we're looking at when we're doing this. Now, we've got a couple of really great charts from our folks in one of our good friends in Las Vegas, and he's brought us a chart that I think we really need to take a look at. It's about the S&P, and I want to bring it up here and let you see. This is the SPX, the cash S&P. He brings out the point, and it puts in some of the volume that Tom O'Brien always talks about. But you'll notice here these white lines that we're right up against those lines again at this 2680 area. That's the same area where we had the big move down. You'll see where the volume was really big, and here we are up into this range again. This just tells us we're into this trading range possibly. Now, if we can get above 2720, then of course this is going to be going higher, but right now it's in that same consolidation. I mean, basically nothing has happened in 2017. It's just really going sideways, and that's pretty much what we're seeing. The Nasdaq, of course, is a little weaker than that, but it is still pretty weak, so you want to pay pretty close attention to it. Now, I wanted to bring another. Well, I'll save that one for when Cy comes on, but I wanted to bring another one from one of our friends in Singapore, and we will bring his chart up because he follows the lumber markets quite a bit. He sells lumber to all over the world. But if you'll take a look here, this is the lumber and wood production since 2018, and you can see that it's been in a strong uptrend. If you'll notice the period between February, March, and April, that is a 135 pattern on the upside. If you remember, the Facebook had a 135 pattern on the downside. This is a 135 pattern on the upside, and that's taken us up quite a bit. So this is telling us that the economy is actually using a lot of wood and lumber, and this is worldwide, folks. So it is really going to be interesting. This happens to be the index that they use for this for the U.S., but it's a worldwide phenomenon. So I brought that to your attention to show you that these charts, not only they work on stocks, they work on indices and other things that are looking at. Now, we've had an interesting question about the Bitcoin. I want to bring it to your attention here because we're at a real critical level here in the Bitcoin. We want to bring this up. I want to put it up here so you can take a look at it. And this is where we are with the Bitcoin. We're right at a 61% retracement of the high from March. If we can get Bitcoin above 10,000, folks, this thing could have legs. Now, this is not a bubble type chart because if you look from December, we did drop from 19,000 all the way down to 6,000, but that's a $10,000 break right at an ABCD level. But remember, it started at 7 cents a share. So it's, let's figure around $100 to $200 is probably when it really started to have legs. But this thing does not look like a bubble any stretch of the imagination. Now, one of my guests this week is going to be, hopefully, we're going to have John Jameson on talking about the weaponization of blockchain and what it means to the internet. A very, very interesting article he wrote for a major paper in London. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to take a look at the Australian dollar here on a technical basis because it has a really interesting pattern that I think we should follow here just to see if it's going to finish like we think it could be. If you'll notice the time that we had in September, the market came down from September through December. You'll notice that the time days down was, very, very 135 days down in the move. And then also, if you look at the time down from January to where we are right now, it's also 135 days down. If you look at the ABCD structure, you'll notice that you almost have a perfect ABCD structure forming at the same time. In addition to that, if you look at the time frame between February, March, and where we are right now, you'll notice a ABCD pattern that fits in very nicely with this price that we're looking at this morning. It's around 75.60, I believe, is where it is right now. That also is a three-drive pattern. So we are at the proverbial moment of truth in the Australian dollar. That's what it looks like. Now, anything below 75 would certainly send this a lot lower, one would think, because that would be major support going back to December of last year. This fits in with a little bit of what we're seeing, of course, in the U.S. dollar index. It had a really interesting shooting star candle on Friday, but it has regained some of its power today, and we're not quite taking out that 91.80 as of yet, but if we get above that, that would tell us that we're most probably going to go a lot higher, and that would mean that the euro is going to break the 120.60 level that it hit so strongly on Friday before rallying 130 points. Now, it came down and tested the 78% level this morning, last night and this morning. So we're at some real key levels as we look at this dollar index coming in this week. We're also seeing gold went down and made a new low. If you'll look at your 30-minute charts on gold, you'll see a very nice three-drive pattern down there at 13.13. And if we go below 13.10, folks, a very high probability we're going going to reach 1285 in the gold. That's a 61% retracement. Silver likewise took out last Friday's low at the 78% level by just a penny or two. It hasn't collapsed yet, but it's just testing some major things. So this might be a really key test on a lot of different things this morning as we're looking at some of these markets unfold. Longer term, the gold chart looks very, very bullish, but we could still have a washout taking it down to that 1285 level. Platinum also looked like it was going to hold. This is an interesting one. Let me bring the platinum up because it's a thinner market, of course, but let's just take a look at this platinum market because, we had that 78% level down there at the 911 level, and once we broke below 911 an ounce, it snapped back, got to 917, and then today we're down $10. We've taken out that low again, so it's still trying to test that. Now, whether that's going to be a bear trap or not remains to be seen. If you look back in July of 2017, you'll notice the bear trap that was there. I marked it there with the red box. You notice how we took out the lows from May. That was a 3-month low. It looked like it was ready to collapse, and look what happened. It snapped right back up. Now, this is the possibility of what we're looking at here, and the reason why we say that is because it's right at this level of 78%, and that could, it's within just a hair's breadth of it. So you've got to pay, close attention to it. It might not happen, but, we're trying to keep the risk as small as possible. And, if this gold gets below 1310, it's probably going to go to 1285 would be my guess, and take platinum down with it. And it would also take the silver down to a level that I think would really be an interesting buy on a really long-term basis, and that is the level of one second here, let me get this up. It's around 15, just around 1585 would be a really interesting one to be watching, on the silver. And remember, there's still a very long-term possibility on the weekly chart that we brought up several times, is to watch that level at 13. Excuse me, let's get the price right here, at $15.10. That's a long-term weekly ABCD pattern on silver that we've featured many times, so we want to watch it very, very close. But the gold is very, very interesting in these levels right here. We're going to see if it's going to hold or not, but longer term, it doesn't look that bad to me, but, a lot of things don't look that bad sometimes. It actually looked pretty good. Hold on one second. Let's put the GLD chart up so you can take a quick look at it, because it's got some pretty nice ratios in here to take a look at. You'll be able to see it. So that's what we're watching here pretty much this morning in some of these markets that we're watching. Now, I'm going to show you one that is very, very interesting that you won't hear much about. Oh dear, where is it? Oh, hold on just a minute, folks. I got it up, but I don't have the right one, so it will take me just about 2 seconds to get it done here. Here it comes. There we go. Now we'll get it up here. This is the long-term weekly chart in crude oil, folks. This is, you'll notice that on Friday, we made a 61% retracement of the high that we made back in 2011. And so we came down. You'll notice the 3 drive to a bottom pattern that we made down there at $26.87, $25.87 a barrel. From there, we've tripled in price, almost up to $68. I think the high was $69.14. And that completed the ABCD pattern. It's also a 50% retracement from that level. And it's also a 1.27 expansion from the move down from 2015 to 2016. This is telling us that we have a pretty strong probability that there might be a lot of resistance here in crude oil. We're down about $0.50 this morning, but we're going to see if it's going to hold or not. But that's what we're kind of taking a look at. Now, in a few minutes here, we're going to have Simon Leon, and we're going to talk about some of these grains. There's a couple of soft commodities that look real interesting. We've already seen a major bottom happening in coffee. It's already rallied 10 cents off the bottom. And we're going to take a look at the sugar market this morning, and also we're going to be looking at soybean meal and soybeans and corn and a few other things, along with cattle and hogs. And maybe Cy will talk to us about the tariffs and some of the things that are going about with the weather market market and some of the things that are going. David's asking a question, what led to the gold going sideways all through 19? You know, David, I really don't know. That's fundamental stuff that I don't understand. I just look at the I just look at the patterns. That's all I really do. In fact, you know what it probably was, David. You know, it topped in 80. It topped in 1980. It didn't bottom until 2003. That was part of that bottoming process before it made its final bottom. So I don't know the answer to that because I really don't understand fundamentals. I understand the charts, and even sometimes I don't even understand those. But those are the ones that I can't kind of keep an eye on. It's all about the amount of money that you risk, not how much money you're going to make. It's how much money you're going to risk. That's the whole key, you know, to doing pattern recognition, because when they fail, they really fail. Stay tuned for Cy Monley of Sylvius Financial, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Cy Monley from Sylvius Financial on the line. Cy, are you there?
Well, good morning, Larry. Yes, sir.
Good. Hey, listen, let's start out with Sugar the Sweet. What's your thoughts on this? Does it have a chance to rally from here?
Oh, wow, Larry, we have priced in a lot of bear news on sugar. We've been talking about this for years. Sugar's just one weather scare away from running pretty hard. Got a lot of shorts in the market. Larry, I watch sugar pretty closely, and we're right there. Same thing with coffee. Those two are poised for something that could be pretty fun fundamentally.
Now, you don't have any coffee hedgers or anything like that, correct? Because you're mostly U.S. Crops that you do your hedging for and stuff.
Yeah, that's correct. But we talked to some of the largest shippers, users of both of those commodities. So I have friends in the space that look at them fundamentally pretty hard. But no, my business is based around corn and soybeans.
Sure. Sai, we have a question for one of our listeners from New York, and that is, what effect has the tariffs from China that I guess they haven't taken effect yet, but are they having an effect on your business at all? Do you see anything?
It's funny. I think it's hurt the Chinese more, Larry. What they did is they said, hey, we're not going to buy U.S. soybeans, and what ended up happening is the cash market over in Brazil, the only other game in place, rallied hard. They went at like $1 plus over the U.S. beans, just the cash market. So the futures didn't move, and all of a sudden China said, oh, wait a second. If we're going to go buy the only beans we can, which will be Brazil, they just are $1 higher now. So it actually hurt the Chinese in the short term. And it's causing meal disruption. Yeah, the unintended consequences of life.
Yeah, I noticed I just posted a chart in the room here on the soybean meal, and I see this morning it's trading above $400 a ton now.
It's right,
really
right?
strong.
All of a sudden, yeah, that's the unintended consequences is the meal, right? Well, if you're not gonna buy the beans, well, we're gonna make your meal more expensive.
Well, it's certainly showing that. And is there anything? They're just starting to plant the bean crop this month. So, what do you think on a fundamental basis? Does this have legs that we could see $12, $13 beans this year? It would take a weather scare, I would imagine.
Yeah, even more. And, you look at Argentina crop, right, kind of really short this year. You've got a demand underneath the market. So your original question is China hurt? Is these tariffs hurt? China's not going to stop buying beans, right? That's the thing as my demand curve is 6 or 7% higher than I think what a lot of people are using, both for corn and soybeans. So that's the unknown is demand. And right now we're talking about supply. We have a short supply anywhere in the world, Larry. You're going to have $5 plus corn. Right now, I think corn at $4 is undervalued. Fair price for me, D's corn is $5 or $4.50. Fair price for beans is $11. So right now, I think we're undervalued, and I think the market will know that. You'll rally up a little bit into spring, I think, and then you're going to, you're going to have everybody long. But yeah, can we see $5 plus corn and $12 beans? You darn right you can.
Sure. Well, there's a high probability that the beans and corn top during the month of July. I think that's one of the highest months for a top in the grain markets, and that fits in with weather scares. That's on right. This, I posted a chart for the folks here for the December corn, and I know you've been following this closely, but gee, since the middle of March, we've made 3 beautiful Fibonacci retracements at 78 and 61% retracement that worked, just absolutely beautiful. So it's trading technically, pretty nicely from what we're expecting. And it looks like we got higher prices coming, like what you're thinking. So, looks up to me.
Yeah, and you've got a short-term top, I think, on a 1.35 year D's corn up at 420, right, Larry?
Yes.
Yeah, and I would agree with that because all of a sudden you'll get it planted. I wouldn't want to be long corn into markets long, and you got the planting at 420 just yet. But how far do we go? There again, technically, do we go below $4? Maybe for a second. And that's where you got to be looking to buy it.
We have a question here from someone about when you do hedging. I know you do a lot of works with the banks in order to let the farmers know what their profit margins and stuff. Now, do you have a range like in corn, like from 390 to say 420, that they have a range where they can build in the hedging, or how does that work? I mean, because they got to pick a spot someplace where they sell the crop, don't they?
Yes, sir. So we have software, Larry, that we use, right? We have what we are call it like an accounting software that shows them their profit based on yield and price. So we do that for the banks. We do that for the farmers. That way they can look at everything. So if you say, hey, $10 beans or $4 corn, which one should I plant? well, let's look at your numbers first. And then we use the board, we use puts and calls, we use structured products at elevators, and that's our whole business, Larry.
Well, I knew that. Now, did you the one that developed this software, Si?
Yes, sir. My partner and I did. Yep. This is
Well,
about
that's
8,
really
9 years
good.
ago.
Yeah. Well, I know your first job, I believe, was with Rich Anderson. Am I correct?
That's correct. Yes, sir.
Yeah.
Rich and I are still
Well,
friends.
Did you get rid of all of his bad habits?
Oh, no. He's got some good habits. I learned
He
some.
does. We'll have him on later this week, but he's a really nice guy. He tells me stories about you, how hard he was on you when you first started
he
out.
was. You got to cut the fat off some of these young guys, right? You got to teach them some lessons.
Oh, that's good. Now, you're originally from Minnesota, though, aren't you?
That's correct. Yeah, graduated University of Minnesota. Rich was my first job, sophomore college.
He's from South Dakota. Now, how many? You might not be able to answer. How many people run Sylvius Financial? How many people do you have working in your group?
So, Larry, we got about 30 employees. We've got a couple other businesses. We're partnered with the largest crop insurance agency that has about 150 employees. We've got just over 1 million acres under management.
Wow.
We also work with about 30 elevators that we do hedging for, Larry. So we're all over the place. Our parent company has about 5,000 farmers. So we got a pretty big network of farmers, and that we're looking at, profit and losses.
Wow, that's really good. And that, I don't know, I want to ask how many hours a day do you work to keep all that running, but it's got to be quite a bit. And I know you do things over the weekend too, so you really got a big operation for sure.
Yeah, it's the needle on the arm thing. Once you're in, you love it. You can't let it go.
Oh, yeah. That's no question. I've been doing it.
I work as hard. I never work as hard as you, though, Larry. Seeing all those charts coming out all the time. So
it's not work. Actually, I enjoy it. Just like you enjoy it. So what are you going to do? So
that's exactly right.
I can't be a rock and roll singer, so this is as close as I can get, I suppose. Si, I have a question on a question one of our listeners is asking about the weather, because last year you alerted us to a couple of things that was happening in the weather that really turned out to be correct. How many different services do you use to give you ideas of what's happening with the weather? And what's your final determination to decide whether you think something big is going to happen?
So we have a bunch. Especially from the insurance company. But I tell you what, Larry, the hardest thing for me is to decipher too much information. And what I have learned with the weather is you got to be looking at 2 weeks out. Beyond that, the market will trade, but it's kind of random. We have models, and we model those models, right? So which ones have been good, which ones have been bad, and you gotta take some of the noise out, Larry, and go with what you're seeing. That's the technical part that I trust you on.
Well, listen, thanks a lot, buddy. And we'll have you on again soon. I know you're really busy this morning, so, keep your family happy and keep working as hard as you do, and may God bless.
God bless.
You bet. Si Monley, Sylvius Financial.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're back, and we're going to be taking a look now at this hog market. The reason I brought this up is that I was chatting with Cy this morning, and we've got a pullback here in July hogs. Hogs was one of the first things to react to the tariffs. So you'll notice it had the tremendous breakdown in here, then it had the really good rally, and now it's making the retest at the 61% retracement. Now, I don't expect anybody to go out and buy hogs this morning, but let's watch it just from a technical basis, much like we do when we're watching the Australian dollar and sugar, some of these other things that you might not trade, but at least you can see technically how they fulfilled some of these numbers that we're looking at. So that's a key thing to keep in mind. Now, the next one I wanted to bring to your attention is one that we do watch quite a bit, and that is, by the way, we will have Rich Anderson on late this week, and he's back in Minneapolis for the summer months, which amount to July 5th and 6th. But as we look at August cattle here, back in February, you can see the 3-drive pattern that was happening at the 78% level. At that time, you know, they were hedging cattle, and this was a really big deal because, you know, when the market goes from 115 down to 97, the farmer, cattle raiser can really make a lot of money, you know, by hedging the crop. And then, of course, when it gets down to cost of production, which is down around 99, you know, he can cover those hedges, and that, you know, basically allows him to have a second different crop to look at. Now, regarding someone's asked a question about Facebook. I have no idea where Facebook is trading this morning. All I know is that pattern at 175 should be valid. If it gets above 175, it won't be valid. That's the bottom line of what you're looking at. So keep in mind that they don't work all the time, but they work some of the time. So watch it very, very closely. Now, if you'll remember, hold on one second, folks. You got to get this frog moving a little bit. I wanted to bring up the wheat chart because we're seeing the same thing in wheat this morning as we are in corn and in beans. There's a lot of buying coming in. We had that beautiful retracement last week that we talked about on the 23rd of April. And then we've had the pretty big move. We're already above the 546 bushel level in wheat, so we should be going up to around 560 a bushel, which might be the double top up into that area. So we'll take a quick look at that, and we'll see what see what's going on. Anyway, that's what we're watching here this morning. We got the stock market really strong, usually into the what we call the amateur hour of the day. So we'll watch to see how that's going. Watch the S&P, because that number that we're watching in the S&P comes in at the I believe it's 2685. I don't know where it's trading at right now, but it's probably above that. Let's just double check it here to see where we are so we can get an idea. See if we're there yet. No, we're not even there yet. It's got to get up to right around that 2682 to 2685 is the area, I believe, where it might run into a little bit of a problem. So we'll see. We're right there on the Dow Jones. We've just hit that number, which is the 24,450, which is the 78% level in the Dow Jones. So that might mean something. It might not. Now, the Canadian dollar is one that we've been watching very, very closely through our 24/7. That's been one of our better currencies. Of course, they're all pretty good, but lately that Canadian dollar has been one that has been very, very good to us. We want to get this up to take a look at it, because this is what we've been watching here in the Canadian dollar. That we had the big rally that stopped right at the high level of 129. That was the exact high. The fib number was 128.97. We're now trading at 128.30, so that's moved in the right direction. So if you did that, you would want to have your stop at about break even. So we'll take a look. I believe the full moon is July the 30th. It's today, Tucker, not the 20th. I think you hit the wrong button. Double check that, because I make those dyslexic functions all the time. So just keep an eye on that as we look. The hog picture did not post. I thought for sure it did. Oh, shucks. No, it's no problem. It is April the 30th, though. Today's April 30th. So we'll watch that. And I will tell you this, Tucker. It will be followed by May 1st. April 30th is followed by May 1st. So that's a thing in mathematics that we used there when we were in Terre Haute, Indiana with our good friend Norm Winsky. We're going to try to have our good friend Bill Meridian from Cycles Research in Vienna, Austria. And I think that'll be a good show if we get him on later in the week. But we will have Rich Anderson on later in the week for sure. Well, 99% sure. Let's just look at it that way, because that's one of the things that we need to be watching. So we'll keep a close eye on that as we look at that. Now, someone's asked a question about something that I don't usually follow that often, and that is the IWM. I'll bring this up so you can take a quick look at it here. This has been one of the weaker indices on this last rally, but today that might change, of course. But we still have an outstanding ABCD pattern down here. Now we're not even at the 61% retracement yet from the 78% level that we made back on the 28th. On the 23rd. So keep an eye on it. That's been one of the weaker ones that we've been watching. Would somebody give me a price of the Facebook? Because I've got two questions about this already, and we'll just have to wait and see, what's going to happen with it. We'll just take a look. But if you don't have the time to give me the Facebook price, that would be good. Basil's going to be kind enough to do that. Okay, it's 174.12, so that's still below the 175 level, and it's up on the day. But I don't believe it's going to get above 176. But we'll have to wait and see if that's going to be the case. That's the main thing. Someone's asked a question about these weather markets. The weather markets start any time now, folks, because it could be cold weather, it could be wet weather, it could be anything that could make these grains move. But they're already starting to move before the crops are even in the ground. That's a good sign. That means demand is there. And as Cy has been saying, that tariff thing bit China on the rear end, because these other countries raised their prices, and now they have to pay up for that stuff. So I don't know if these tariffs are going to have much effect at all, but just look at the charts. That's the main thing that you want to be watching, to keep an eye on what we're looking at right here. Now we've got gold down quite a bit, silver's breaking, so it looks like we might get down to those lower levels in gold and silver. So you want to keep your powder dry, just to see if that's going to happen or not. We won't know for a while, but we will watch it very, very closely. Okay, someone asked me to post a chart of Facebook again. I'll be happy to do that, and then we will move on. We got a break coming. Second, we'll have a break coming up in a minute, and then we will wrap up the show and talk a little bit about some of these breakout levels that we could be looking at to see what's going on. Mr. Z just told us that the corn crop in Brazil is already under pressure, and the wheat crop in Australia is under threat. So we're starting to see it. Yes, May 1st is the big Chinese Workers' Day in China. Sarah, they closed the whole week. They don't know anymore, but I know they're closed Monday in the markets, but I think China closes the whole week. I'm not sure. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've got a pretty strong stock market. The Dow's up about 150. The Nasdaq's up about 35. The S&P's up around 10. So it's going to be an interesting day. Remember, the first part of the move this morning is amateur hour. You know, wait till that first hour is done, 45 minutes the first hour, and see where you are. Because after that opening buying, sometimes that can be the high or low of the day. Today it's going to be a high if that is in fact the case. So kind of keep an eye on that. Canadian dollar is working very nicely. The euro is setting at major support here at the 120.75 level, which is the 78% level of the move. We got gold breaking below 13.13, which is not a good sign. If you're bullish, we expect it heading towards 12.85 now in the gold, and that would bring silver down to around the 15.85 level. That's another 35 cents or so lower than that. We want to watch it later to see if it's going to get to those levels, because once they break key support, they usually move down to the next level, and the next level in those is quite a bit lower. So let's watch it. The crude oil is still lower. We've had a little bit of a bounce of about 40 cents a barrel just recently, but the trend is certainly down in the oil. But we do have some really strong support at the 67 level in the even $67 a barrel level in crude. That's an important 61% level that we've hit 3 times now over the past several days. So that's showing you that there is a pretty strong support at that level in the crude at $67 a barrel. So watch that one very, very closely. We will have Rich Anderson on later this week for sure, and then hopefully Bill Meridian also. I've got him scheduled, but the question is little travel plans on both of those folks might change it a little bit. So keep in mind that's what the schedule is so far for the week. So I want you to live every day in an attitude of gratitude, and may God bless, and have a wonderful trading day.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!